Hey everyone, glad you're here today. Let me start with a question. Has your local bank branch closed recently? Or maybe you've noticed fewer tellers and more machines? Well, you're not imagining it. Across the country, banks are closing branches at a pace we haven't seen in decades. In fact, just over this past summer, 74 branches shut their doors in only 6 weeks. And it's not just small community banks. The biggest names like Chase, Bank of America, and Wells Fargo were all on that list. What's surprising, though, is that some experts predict if the current trend keeps up, the last physical branch could disappear entirely by 2041. That's not as far away as it sounds. So, stay with me, because by the end of this talk, you'll understand exactly why banks are making these moves, who's most affected, and what you can do about it. Before we get rolling, let me ask you this. Have you ever had a bank close near you? And if so, how did it affect your day-to-day life? Share your experience in the comments, because I think hearing each other's stories really helps. And while you're down there, don't forget to subscribe. It helps keep this conversation going. So let's talk about why banks are closing branches in the first place. The truth is, there isn't just one reason. A big part of it comes down to technology. You see, back in 2009, bank branches were everywhere, and for a lot of us, that was the only way to get things done. Fast forward to today, and most people are using apps on their phone to check balances, pay bills, even apply for loans. The pandemic only sped that up. Once people realized they could deposit checks by snapping a picture on their phone, many never looked back. And banks noticed running a branch is expensive with rent, staff, and security. If fewer people are coming in, banks start asking if it's worth keeping the lights on. But technology isn't the only reason. There are also financial pressures. Higher interest rates, inflation, and slower growth in the economy all eat into a bank's bottom line. Cutting costs becomes a priority, and branches often end up on the chopping block. And then there are regulations. After the 2008 financial crisis, new rules were put in place to protect customers, which was a good thing, but they also made it more expensive for smaller banks to operate. Some of those costs are easier to absorb if you're a giant like Chase, but for a small community bank, it can be tough to survive. Now, here's something you might not know. The government does require banks to give notice before shutting down a branch. They have to give regulators 90 days warning and notify customers at least 30 days ahead. But those rules don't actually stop the closures. They just make sure the bank follows the process. And for people in smaller towns or rural areas, that notice doesn't make the loss any easier. Suddenly, the closest branch might be 10, 20, or even 30 miles away. Imagine being elderly, not having internet, and suddenly needing to drive that far just to cash a check. It's more than inconvenient. It can cut people off from the financial system entirely. That's where the idea of banking deserts comes in. These are areas where there are little to no bank branches left. Between 2019 and 2023, hundreds of new deserts popped up, affecting more than 750,000 people. And it's not just rural areas. Some suburbs and certain communities have been hit the hardest. In some of these places, the average distance to the nearest branch is 30 miles. That's not realistic if you depend on public transport or you're on a fixed income. So then, how are banks trying to fill the gap? Some are experimenting with mobile branches, basically buses with teller windows that drive to underserved communities. Others are installing advanced ATMs that let you talk to a teller through a screen. And of course, there's the push toward digital apps and online platforms. Some banks even say they're reimagining branches, not eliminating them. For example, Chase has closed some branches, but also announced plans to open 500 new ones by 2027. The difference is these new branches look a lot different. Instead of long lines of tellers, they're more like advisory centers where you can meet with someone about a mortgage or small business loan. And guess what? Even though some banks are pulling back, others are actually expanding. Bank of America said it would open 150 new branches over the next few years. The idea isn't that branches are disappearing altogether. It's that the role of the branch is changing. Instead of being the everyday place where you cash a check, it's becoming more specialized. So, you'll probably still see a branch in the future, but it may not be around the corner like it once was. Another layer here is policy. The Trump administration recently rolled back some disclosure rules. arguing that it would reduce red tape and free banks to invest more. Critics say it could also let banks hide problems until it's too late. And earlier this year, regulators reversed their 2023 update to the Community Reinvestment Act, which had pushed banks to serve low-income and online communities more effectively. That rollback means less pressure on banks to keep physical branches in struggling areas, and that could widen the gap between communities that have easy access to banking and those that don't. Now let's bring this back to you, because that's what matters most. What does this mean if your branch closes? Well, first, remember that you'll get at least 30 days notice. Your bank will usually point you to the closest alternative or suggest their digital options. But if you're someone who relies on in-person service, that may not feel like much comfort. You might face longer lines at the one remaining branch, or you may have to learn to navigate an app you're not familiar with. For small business owners, losing a branch can mean longer trips for deposits or harder access to credit, and that can impact the whole community. Another thing to consider is that while big banks may be shrinking their networks, community development financial institutions, credit unions, and mission-driven banks are often stepping in. In some cases, they're the ones keeping the last branch open. These institutions may also provide extra services, like financial counseling or small-dollar loans, that help keep people afloat. So if your local bank disappears, it might be worth checking if there's a credit union nearby, or even looking into online banks that have solid reputations for customer service. You know what's strange? Even though most of us now live in a digital-first world, surveys show that nearly half of Americans still prefer banking in person. And more than 70% think the system needs reform. That tells me there's still a strong emotional connection to the idea of walking into a branch, shaking someone's hand, and knowing you're being helped face to face. Losing that can feel like losing trust, and in finance, trust is everything. So, where does all this leave us? The future probably looks a lot like retail. Just like Amazon didn't kill stores but changed how we shop, digital banking isn't ending in-person banking. It's reshaping it. We'll see fewer but smarter branches focused on advice and relationships rather than everyday transactions. And we'll see technology continue to grow with AI, video banking, and mobile apps doing more of the heavy lifting. But there's still uncertainty. If closures continue at the current pace, access gaps will grow, and certain communities may feel left behind. That's why paying attention to these trends matters. It's not just about banks saving money. It's about making sure everyone has fair access to the financial system. So yeah, if you've noticed changes at your local bank, you're not alone. And if you haven't yet, chances are you will in the years ahead. The big question is how we balance convenience and efficiency with fairness and accessibility. Because at the end of the day, banking isn't just about money, it's about people's lives, their communities, and their sense of security. Thanks for hanging out with me on this one. Don't forget to share your own experience with branch closures down in the comments. I'd love to hear how it's affected you. And if you found this discussion helpful, hit that subscribe button so you don't miss the next one. There's always more to talk about when it comes to money and how it shapes our everyday lives.